The Indian markets have been a bit in a consolidation mode. At least that's been the nature of the market over the last 2 to 3 trading sessions. And for what it's worth, globally as well, things have been fairly quiet, at least so far in the month of December. And that's the reason we haven't got much cues to look at, even when you're staring at the global picture. US futures for now have been fairly steady. Remember, there's that CPI report that we are watching out for. So that's something to really, track at this point of time. But the benchmarks continue to be at record highs for what it's worth in the United States. That's been one market which has done exceptionally well this year, at least in the later half since the Trump re-election has really happened. The markets have got a further fillip. There's the Japanese data that has come in, so we are tracking that. The crude oil inventories are unexpectedly on the higher side, and that's something that has kept actually crude prices in check, because even when there was that supply glut happening, the demand is something which is on the weaker side, and that's why crude prices have been fairly steady. Alphabet, that managed to jump 5 to 6% on an overnight basis. That breakthrough happening with Willow is something that definitely has the street excited. But overall, Nikunj, I have to say it's been fairly quiet so far in the month of December, and I guess that's going to be the nature for the rest of the month. And maybe we can do with a bit of a less news flow. It's been a very hectic year.
No, Nisha, I mean, if you really look at the market in terms of the texture, in terms of commitment, in terms of price points, I think the price action in December has been far more satisfactory than what everybody anticipated. Yes, I agree that there is no news. There is hardly any global cue which in a sense could have impact on the market per se. But for me, I think it is not the Nifty. For me, it is not the bank Nifty. For me, I think it is the Nifty, small cap and the mid cap space, where the comeback has been nothing short of delightful. Nifty may be up for the third day on the trot now, but the broader market has advanced for the 13th day on the trot now. We are not far away from an all-time high on the small cap index, a place or a pocket where everybody in a sense has been raising concerns about rich valuations and the impact of earnings. So if the small and the mid cap space is making a comeback, and if it is now leading the market action in last couple of days, it is a clear indicator that the local crowd is not feeling jittery. The confidence to buy high and sell higher, I think, is there. And I think for the market per se, we are in that patch where there is no news, momentum is back, the FOMO crowd seems to be coming in. For those who sold out in the month of October, did not buy in the month of November, now they are making a simple comeback, because the speed at which markets have made a comeback, I think that has surprised everybody. And I continue to maintain that in the near term, the bias would be positive. This is not a market where for next 2 weeks you should be in a mode to book profit. So stay with the market, stay on the course. This market, at least in the near term, is going to be driven by not news, but liquidity and momentum, and currently, and a lot of catch me if you can kind of in syndrome. When these three factors are at play, I think markets, they tend to do well rather than they tend to come down.
Oh, well, yes, and that small cap outperformance that you talked about is definitely the key highlight. And what's interesting is that FOMO crowd, which is the FII, seems to be coming back. So that's the big positive as well. In fact, if you look at this month so far, FIIs have pumped in almost 13 to 14,000 crore rupees into the Indian equity markets. And this time around, DIIs have been a bit on the back foot. They have put in only 750 crores. And it's interesting because FII money usually comes into the large caps, and we usually tend to believe that large caps as a category does better when there is that FII money coming back and looking at various avenues of investment. But for now, it's the small and mid cap which has been doing better. Maybe large caps will follow suit. That's something that we're tracking at this point of time. And yes, the November SIP data that came in yesterday as well talked about how it's above 25,000 crore for a second straight month. So that also provides a bit of a fillip. A lot of sectors doing well, whether it is IT, whether it is metals which were at 1 month high, and that's of course on back of the China stimulus. But we're talking about the market moves and of course the gains that we have seen. If you look at the last 12 sessions, Nifty has managed to jump up 5.5%. Bank Nifty has been outperforming with that 6.5% gain, and then the small cap category with that 11.3% gain coming in over the last 12 sessions itself. And if you're looking at life high levels, surprise, surprise, it's Bank Nifty, which is just 1.7% away from that life high level. So at the start of the year or for most part of the year, we're discussing the bank's underperformance. They have quickly caught up and now they're less than 2% away, and small cap of course 0.3% away, Nikunj, as far as life high is concerned. So what do you make of this? Because as I was talking about, the FI money is coming back, and usually we believe banks or large caps are the port of call, but the small caps have been doing better.
No, so Anisha, in isolation, even FIs have made a comeback, and some of the FI dominated stocks have done well for themselves, with the exception of Reliance. Let's look at HDFC Bank. I think that's done it's done rather well for itself. So it's not that the entire market per se has not reacted to the FI flow per se. My limited point here is that why are markets coming back? The reason why markets are coming back is because there is no news which has added to volatility. October and November, it was all about events, some good outcomes, some bad outcomes that added to the element of volatility. Last 15 days, there has been no local event or global event which has added to or which has compounded volatility or the downside. Second, when FIs are making a comeback, because the China trade which everybody preempted has not really translated into a very big change, that also clearly helped Indian markets on the margin. And third is you don't have any large IPOs. So no event volatility, FIs coming back, no large IPOs. So whatever selling which was coming, it is getting absorbed. Domestic institutional investors already are sitting on decent amount of cash. They are getting the SIP flows. So that money continues to move in. And the minute markets or the local crowd realize that the downside is limited, upside seems to be coming back, they are also coming back and buying small and mid cap stocks which are patronized by HNI investors. So I think it's a technical way in which how markets have moved. If one really looks at the setting on the table, which are the stocks which are at a 52-week high, all high growth names here. And if you ask me that what is the difference between the previous high and this high, I guess high growth names, fintech names, financials, financial intermediaries, consumption, especially travel and tourism, those are the themes which are making a comeback. So the rally is led by banks, then you got financial intermediaries, and then you got high growth names or the fintech names. There is no capex this time. There is no consumer sector which is getting revived. There is nothing big also happening in terms of where themes are moving within the railways in the defense space.
If you like this video, then like, share and subscribe to ET Now.